In this video, we're going to cover risk management. This video could really make or break your trading, because if you don't understand risk management, then you can have all the trading strategies you want, but you will be wondering why your results are not there, because you don't have any plan or game plan to how you're managing your investment, how you're managing the risk of the investment. So we're going to kind of split this video into two different parts. So I'm going to go over first just a simple form of risk management, to where if you went through like this set of rules as a rule of thumb, then you would be all right with trading. Second part of the video, I'm going to cover the business of risk management. So I'm going to get real deep in that in that part of the video, to where you'll really understand how to game plan and how to really see how risk management works from a deep level, a business level. So the first part, the main thing that you want to do for simple risk management, I'm gonna just do simple risk management. First thing that you want to do is make sure that you're not trading more than 2% per trade. So no trading more than 2% per trade. The second thing is that you want to target at least a 2-to-1 trade. The reason being is because if you do at least a 2-to-1 trade, you don't have to be 60% correct or 70 or 80% correct to be profitable. You could be around 50% correct and be profitable. That's really important, especially when you're just starting out. So what I mean by 2-to-1 is that you're risking, your reward to risk is 2-to-1. So that means you're risking $1 to make 2 when you trade. So that's a risk to reward ratio, RRR. The other thing is that you don't want to have more than 10% of your account. And this is really important, especially when you're just starting out. We can do 12. I think 12 is a better number, just in case. So 10 to 12% of your account at risk at any time. So if you're doing 2% per trade, that means you can make 5 or 6 trades at a time. So what does that look like? If you have a $500 account, let's do 1,000, make the numbers easy. $1,000 account. And you're doing 2% per trade. Two percent of 1,000 is $20. So you're risking $20 per trade. So if you had 5 trades going, you'd be risking $100. And if you're doing 2-to-1, a reward to risk, I don't know why I always say it backwards, reward to risk, then that's going to equal do this, $40 every win. And $20 every loss. So if you're looking at it like that, you know, if you're doing $40 a win and $20 a loss, it's going to take you two losses to match up to one win. So two losses to match up to one win. That's three trades. You won one time, but you placed three trades. That's 33%. One out of three. It's 33% to break even. Now, does that take some pressure off of you to know that all you have to do is be 33% to be break even with this risk management plan? And if you were 50% correct, you would be profitable. Like if I learned this when I first started trading, my trading story would have been completely different. If I learned this right here, 33% to break even if all of my trades are 2-to-1. But here, that's the simple risk management. What I'm going to go over now is the detailed risk management. So this risk management, you can basically project where how your what am I going to say, your rewards, your winnings could be before you start placing trades, and you know what target percentage, like what target win percentage you need to hit in order to hit that target weekly percentage. So this is going to be the detailed version of risk management. Now, if you're really a beginner and like just this by itself was kind of a little bit confusing to you, you can go ahead and end the video now and then rewatch just this section of the video to understand. But if you want to know how it really works, how the business of risk management works, and how you can give yourself targets to hit on an accuracy perspective, then keep watching. I'm gonna go over that right now. So when it comes to the detailed part of risk management, you need to know what your risk percentage is. You know what your risk percentage is. So if you're risking 2% per trade, that would be the number for that. So risk percentage per trade. And then you're going to use, this is going to be kind of like a risk management formula. Your frequency, how many trades you're placing. So I'm going to just do the abbreviations and then define them, so that way when you see them in the formula later, you know exactly what I'm doing. Your win percentage. And then your losing percentage. Your reward. So the reward part of your risk to reward. So in your risk reward ratio, so the numerator, so if it's 2-to-1, 2 is your reward numerator. It's 3-to-1, risk to reward to risk. It's 3 is your reward numerator. Your risk itself which would in most cases be 1. And then your account, and I'm just listing these out, like don't try to piece together the formula just by me listing out the different parts of it. And when you see it, it's not going to be as complex as you look. But I'm just breaking it down to where you won't miss a part. Like if you follow this formula from start to finish, you're not going to mess up the formula. So that's why I want to show you every aspect of it. And maybe I can one day make a Excel spreadsheet that does it, but right now this I have to do. So account gain per trade, account loss percentage per trade. And typing and talking is not my forte, so we're going to get through this. This is going to be your account gain per trade. I mean, your account gain gross percentage, not account gain per trade. Account gain gross percentage. And then account loss gross percentage. And then this is going to be your true gain percentage for whatever specified time, whether it's days or week, but it's just going to be your true gain percentage. So I'm going to make all of this right here very simple. And you're probably not going to find someone that's going to show you this. They're going to stick here. They're going to give you the simple risk management. And that's going to be it to their risk management. It's going to be completely it. Even though this will be okay, this will suffice. This is not going to show you the ins and outs of risk management. This is going to show you the ins and outs of risk management. So let's get started. First part is your frequency times your win percentage. It's going to equal trades won. Let me add that real quick. TW equals trades won. TL doesn't equal timeline, equals trades lost. Okay. That's going to equal your trades won. 100% minus, and when you do percentages on accuracy, you want to put those percentages in decimal form. So like say, for example, 100% is 1. And then 50% when you're doing the trade accuracy is going to be 0.5. So keep that in mind. So minus win percentage is going to equal trades loss. I mean losing percentage, not trade loss. Losing percentage. And then frequency. Frequency times your losing percentage is going to be trades loss. Then we're going to go over to the risk and reward side of things. So then you would input your reward. So your reward numerator would be, if you're going for 2 to 1, would be 2. But so you know the formula is your reward and then times your risk percentage. So this is going to be in whole number form. There we go. All right. That's going to be the whole number form. That's going to give you your account gain per trade. And that's to be the account gain percentage. Your risk times your risk numerator times your risk itself, your risk percentage, is going to give you your account loss. And definitely write this down. I don't have the formula memorized off the top of my head. I always keep it with me. You want to make things as easy as possible, so don't try to memorize this. Your trades won, so that's going to give you your account gain and your account loss percentage per trade. Your trades won times your account gross percentage and that's going to be, let me make an asterisk here. So which one was decimal form? Decimal form here. So that way you know which way to decimal form there, and then whole number form. There we go. That's going to equal your account gain gross. So your total account gain gross for that, let's just say week for this example, for the week. And then trades loss times your account loss percentage. It's going to be your account loss gross. So simply, you do all of that to get your total account gain and your total account loss. And all you're going to simply do is you're going to take the account gain percentage and minus it by the account loss percentage. And that is going to equal your true gain percentage. So if you did all that to figure out that, like say if we did 2 to 1, we did 2 to 1, it's easy to do this in your head once you get good at it. But if you don't know how to base your risks, like just thinking about it, this is the formula you can do to where you don't have to think about how to quantitate the numbers. But we can do an example real quick so that way you know how it works. So let's do the example. Same thing. We're going to do, so in the example, we're going to do 10 trades a week. 10 trades a week, not even 70, 50%, 50% risk accuracy, 2 to 1 2-to-1 risk to reward. Reward to risk. I don't know why. I gotta fix that. Reward to risk. And what am I missing? Risk reward. Oh, 2% risk per trade. So that is going to be the example. So we're going to go here and we're going to fill it in. So frequency is 10. It's 10 trades a week. 10 trades a week times 50% win rate is going to be 0.5. And that's going to equal 5 trades won. 100%. Of course, you could probably skip this if you know this in your head, but I'm just, like I said, A to B is what I'm doing. Everything in the middle. But 100%, I'm going to do that in decimal form. So it's 1 times the frequency. Yeah, so 100% times, not decimal form. 100%, or either way on this one, minus 50%. It's going to equal your trade's losing percentage. So you're going to lose, if you're doing 50%, of course, you're going to have 50% losing if you're winning at 50%. The next part is going to be frequency times losing percentage. So frequency is 10 times losing percentage, which is 50, in decimal form. In decimal form, just to make it simple, I mean, everybody knows that you can't put a percentage against a whole number without putting it in decimal form, but let's make this simple. I'm not doing any assumptions with this formula. So 10 times 50% is going to be 5. 0.5 is going to be 5. All right, so now we go to the risk to reward, reward to risk side. So your reward numerator, you're doing 2-to-1 risk to reward. So your reward is going to be 2. And then times, and then this risk percentage is going to be 2. So that's going to equal 4% per trade. So for per trades on, because that's going to equal your account gross per trade. So account gross percentage per trade. Per trade one. Next part is 1 because you're 2-to-1, so your risk in this example is 1 for the reward to risk. So it's 1 times 2. 2 because you're risking 2% per trade. And that's going to equal 2% account loss percentage per trade loss. Next part of the trades won. So we won 5 trades times 4. Because for 4% trade, 4% per trade, that's going to equal 20. So that's going to equal 20% account gain, total account gain gross. %, for the week. or whatever time frame you're using, week, month, day, trading session, but we're using week in this example. So 5, you made 5 losing trades lost, times your account loss per trade, which would be 2. That's going to equal 10. So ALG percentage for the week. And simply at the end, you would just do the 20 minus the 10. 20 minus the 10, and your total gain for the account for that week would have been 10%. So, how would you like to make 10 trades a week, be 50% correct, risking 2% of your account, and get 10% a week? That's what strong risk management can do for you. It took me a long time to learn that. But you don't have to be the most accurate trader to be profitable. You're 50%, but you're 10% a week. If you can manage 10% a week for 2 to 3 years, or a year even, that's going to be life changing. And that's what the plan that I've been on. You know, of course, I've gotten to where I've gotten a little bit better percentage wise, but having strong risk management will take all the pressure off of trading. And this is how you do your risk management properly.